On today's show, you'll hear investor perspectives on the COVID-19 impact on the cannabis market. This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. It's the time of COVID-19. Cannabis is currently gaining regulatory approval across the U.S. The lockdown has declared certain sectors, including cannabis, to be an essential service. We have investors and startup founders describe the impact of COVID-19 on the cannabis market. I hope you enjoy this episode. My first guest is Matt Nordgren of Arcadian Capital. So within cannabis, there's a lot of subsectors. Which of those are responding positively to COVID and which of those may be negative, if you can divide it up in that way?
Let's frame it in three categories then at super macro level. Category one being commodity-like assets. Okay, so a retail location, maybe less so, but an agriculture business, a manufacturing company, that type of business, let's put it in category one. Fortunately for those assets, which are very CapEx intense, require a lot of people, and they went public, a lot of them, because they needed that capital to grow. Fortunately for cannabis, over a year ago, there started to be this move towards path to profitability, running lean, having proper valuations, not having an agriculture business trading at 75 times revenue, more like 3, 4, 5, 6, 7, And so that was already happening anyway from the fact that these companies went public probably too early and were being forced with limited capital to do this. So going into the pandemic, that category of assets benefited from timing of already having to work towards that. So now you've seen public stocks up, probably outperforming most categories, to be honest with you. And I think that's very lucky because they had already spent a year or more trying to be a company prepared for a pandemic. So I like that category. I think you're going to see a ton of M&A. Pay attention to debt on these companies. Pay attention to who these company strategies are really beholden to. Is it more of the private investors? Is it a founder, shareholder-friendly structure? Is it a fully banked public deal that they, have other reasons to do certain things, in which case you may see more M&A. So that's that category. I think in the middle, you have supply chain companies, B2B type companies, businesses that serve the industry, data, software, HR, compliance, media, packaging, bottling. These businesses largely are private still, haven't really gone public, didn't need as much capital. So I think you have a lot of reason to be opportunistic about mid to late stage growth in the supply chain. I think you largely had operators that didn't see the shiny objects the public markets presented them and did a private round at a proper valuation, one they can move and pivot from in the event of a fire, which you expect in an emerging industry. I mean, variables, you don't know what they're going to be. There's going to be more. That's why you stay private. So a lot of the supply chain companies did stay private, and I do feel like they are properly capitalized. There's cash flow in the industry. I think that's a nice place to lean in if you feel like mid to late stage growth, a little less risk. A lot of them don't touch the plant too. You can get outsized returns there. Really like that side of the portfolio. Think it's benefited. Lastly, as a category B2C, consumer. I think this has benefited the consumer category, but we don't really know a lot yet. Nobody's won anything on the consumer side. So I still think it's a little bit early to lean in heavy on the consumer side. I think you'd like to see this will spur more regulations to come out quicker maybe than before, but they aren't there yet. Even in CBD, we've seen that. So I think on the consumer side, it's been good, but I don't think it's provided the clarity that the industry needs just yet to really lean into the consumer side, which creates opportunity. That's where I think the most outsized returns could be, but you're going to take on more risk.
My next guest is David Hess of Trust Capital. So within the cannabis space, there's many subsectors or several. Which of them do you see, going positive with COVID-19 and which are not being impacted so much?
What we're seeing a major uptick in, again, is certain subsectors and certain formats, right? For example, edibles, right? Or beverages is another strong one that we're seeing now. For a long time, beverages weren't the mode people were running towards, right? People were more familiar with the traditional forms of medicating with cannabis, such as, combustion, right? Then we saw the numbers with, vape pens, right? Soaring throughout the state of California and throughout the rest of the US. And then we saw the vape crisis, Vapegate, right? And so for a lot of, even though those within the industry and many outside of industry began to understand it was an illicit issue versus cannabis cartridges that were purchased legally in a store in a legal state that was tested, it nevertheless started to persuade people to go ahead and move over to other formats like edibles and beverages. And now with COVID-19, we've just seen that, 2 or 3-fold. And so that's very exciting for us in particular. We have a company in our portfolio that has a really unique IP in that they extract cannabis and without having to do any kind of emulsification or nano encapsulation, they produce a water-soluble product, right? So that addresses an issue that the industry has been trying to figure out for some time. For consumers that go into a bar, for example, right? They aren't looking to have a sip of wine or a beer and have the effect hit them an hour, 2 hours later. They want to enjoy their time with their friends, their colleagues for that hour, and then go home and go about their business, right? That's been a challenge with cannabis for quite some time. And now we're able to solve that with some of this new technology. And it's going to be exciting now, that people are going to give beverages more of a chance.
And my next guest is Marcus Estes of Signet, a technology company in the cannabis space. Great. So aside from the retail and the e-commerce aspect of it, there's many sectors. There's wellness and there's actually plant development and there's different applications of it. Which of those are doing well based on COVID as far as it's being used and not being impacted negatively?
Cannabis has proven resilient in many ways, not in every way, but resilient in many ways to COVID. Here we can just kind of look at the market, where the market was pre-COVID and just say, well, these trends are still in play. Yeah, look, you're quite right. Looking at the wellness piece of the cannabis story, there's a massive growth opportunity and the numbers are bearing out already. But people say there's a blue sky ahead. When you look at people who are not, the first wave of consumers were people that were probably consuming in the black market and they were looking for intoxication, right? Now, a lot of brands have been trying to crack the nut of how do we go after, some joke inside the industry is the people kind of tend to talk about the soccer mom. I don't know why she gets so much attention, but the idea here, we've got really a pretty normative Norman Rockwell kind of family. But given that this is legal and frankly healthier in many ways than alcohol consumption, we're looking at people who might be having a glass of white wine or two after dinner and now thinking maybe I should have puff. And, casual consumption. And then on the other side of that, we're talking beyond the intoxication and relaxation, therapeutic benefits. And there is a huge amount of information coming down the pike there. This is both, there's a Venn diagram here. We've got actual medicinal use, which is sometimes directly prescribed by ones. I have a friend, for instance, right now that is experiencing a benign form of stomach cancer. Her general practitioner suggested you need to go speak to a cannabis specialist. There's enough data here that you may be able to get some help there. So that's just a personal anecdote that you could say, well, how do we look at the market for people using cannabis products to potentially reduce inflammation? There's indications, for instance, IBS and Crohn's disease have some positive interaction. So if you look at the medical market and sort of how that sort of veers into the yoga wellness casual consumption market, here we have already a pretty good base of consumption. But the interesting thing about that is how much further it could grow, because you point towards their comparables in pharmaceuticals and you think, does cannabis start to eat at the pharmaceutical markets? And I think most people in the space, optimistically would say, yeah, that's likely. What would be necessary to propel that, of course, is further consumer acceptance. And that is oftentimes driven by research. So it's a whole separate topic there, but cannabis research is still in its infancy. And we need to see, I think some of the most exciting plays right now involve research. It's very hard to do cannabis research right now. So if we see some of those things get unblocked from a tactical or even regulatory level, that could unlock massive wind changes in the market.
My next guest is Alexandrian, a venture capitalist from Canopy Rivers.
Yeah, I'd say there's about three sectors where we're really keen on. The first one being plant sciences. So when we look at cultivation of cannabis, it looks very primitive to other crops such as soybeans and lettuce and tomatoes. And then the large agricultural giants of today are slowly coming into the industry. So there's a lot of opportunity there to see not only pure play cannabis companies, but other crop technology companies looking into the cannabis light and figuring out ways to make the plant more resilient to pests, more vigorous, more strong, keep the THC content high, increase the flavor profile and the terpene levels without altering the genetics of the plant or without causing any undue influence on just the natural growth of the plant itself. So we're very keen on that piece. The second area would be on the brand side. Over the last year, we really haven't seen many brands show that long-lasting affinity that you see in typical CPG sectors. The top 5 brands are consistently changing places or getting kicked out and other companies coming in. So we think there's a great potential for companies to really arrive and just enter into the industry now and make a brand name for themselves and create that customer affinity. And then the last piece, which has been the most pronounced during COVID, would be on the technology and software side. With click and collect and e-commerce and delivery services really taking shape during this period of time, we've seen a boom in technology that caters towards the cannabis brands and cannabis retailers. And they've been resilient, and not only resilient, but they've been growing at a quick pace even during this entire COVID crisis.
Oh, great. And so which sectors inside cannabis were impacted negatively, you think, by COVID, if any?
I'd say brick and mortar retail was probably hurt the most. At the beginning period of time, everything was shut down and then it opened up. To not have the foot traffic coming in means that it's very hard to get intenders to become consumers. So that part was difficult. Outside of that, there's certain areas around the world where it wasn't deemed to be an essential service. So you had cultivation, extraction being shut down as well. And as you know, Canopy Rivers is a global company, so we're looking at it from all points. So I wouldn't say much of it was negative. I think when you take a step back, COVID-19 really helped the industry go forward and really catch some of the momentum that was lagging over the last half year before that. And it's still continuing to go on. So I'm really pleased with the results there.
So great. So what new applications do you think we'll see coming up in the next 12 months in this space?
Yeah, on the brand side, I think we're slowly seeing more and more hyper-focused brands coming into play. So the larger players are moving towards a volume game, which is being the low-cost leader and pushing out cannabis that has 20% THC, good cosmetic feel to it, and really taking users away from the illicit market with low prices. Then we see the smaller companies really going towards a fragmented approach of let's dice down the cannabis consumer into demographics and psychographics, and let's go after certain use cases or certain demos and psychographs. So an example there would be a product for sleep. Up to this point, you want a product for sleep. You go into a dispensary and you talk to a budtender, you say, like, what can I get for sleep? And the budtender walks you through 3 or 4 of the brands that he or she remembers the most. There's a lot of friction in that process. So companies are coming out saying, you know what, instead of doing that, why don't we just create one product just focused on sleep and sleep alone, and then put that on the shelf so when the customer comes in, no questions asked, they can just pick up the product and buy it. That we're seeing really resonate. As the volume and fragmentation approaches go towards their certain corners, they slowly start to diverge into specialization, which is companies will know, and they'll turn to traditional CPG companies, where to focus and what they do best, and we'll stick to doing that. So on the brand side, we've really seen a maturation of companies, but as I mentioned before, there's still a lot of opportunity for companies to take shape and pick up market share as some of the larger companies struggle.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.